morning, Monday. What's up, everybody? Welcome to the Monday morning edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope everybody had a phenomenal weekend as we are about to do what we do each and every Monday, Wednesday, and Friday, taking a look at our four major markets, S&P, NASDAQ, crude oil, and gold, and then our stock of the day. Stock of the day is a little bit of a precursor based upon some earnings reports that we've seen, but let's go ahead and dive right in. Now, last night, by the way, we had our live trade room for our Sunday night session. Hopefully, you were able to join us for our live trade room. And if you missed it, go to tradersarmy.com, become a member. You can see a little bit more. But some of the lines that you'll see on the charts are from last night's session. Now, last night we were looking at the S&P, noting the fact that the S&P did have a little bit of a weakness area down here. That if we got basing below here, you may get a decent little breakout. Obviously, the basing hasn't occurred. And the market's actually traded up all night from our live trade room. We're doing our live trade room at 7 p.m. Central. And so we never did show any more weakness, which is why we don't just take shorts, right? We got to, especially when you're at an all-time high. I do think that from a daily chart, from a swing trading perspective, there's a really nice wick over wick level right here for a swing trading area there at about 44.80. And on our daily chart, we did put in a really nice reversal candlestick. But we're not going to get short unless we got below Friday's low. And so that certainly hasn't occurred. And I'm very, very willing to get long above the all-time high for a breakout trade to go higher. So I think that is still probably your most valid setup this morning, as we didn't see much follow-through on the move down. So as far as today goes, when I look at this on a 4-hour chart, I would continue my bullish outlook. There's no reason to not to, knowing that if we do break below 45.15, I think there's room to drop down to 44.80. And typically when the S&P puts in a new all-time high, you get a couple of day pullback shortly thereafter. So I wouldn't be surprised to see a little bit of a pullback after we pop up just a little bit higher. In the NASDAQ, so NASDAQ, kind of a similar picture, but I think the NASDAQ actually set up for a better breakdown if price based inside this region. Notice that we didn't base anywhere near that region. And it's tempting to take this area of supply right here. This is a pretty well organized wick over wick supply area, which notice we just about touched it and have really kind of gone nowhere since there. But we're in an upward trend, and so with a big picture upward trend occurring, I can't take that area of supply. I need to focus more on breakdowns if it sets up for a short, and then getting long at quality areas of demand. Now, unfortunately, though we rallied up in the overnight, we didn't really put in a great demand area to lean on either. I mean, there's this little level right in here, but not formed at a great time of the day. So I have neither great demand nor great supply. So I think it's probably a good idea just to hold off and not force a trade until I get one of those breakout areas to be effective. Now, why do I think it's that the markets are chopping a bit sideways? I think the markets are chopping a bit sideways primarily because we've got a fair amount of weakness coming in. Fair amount of uncertainty, not necessarily weakness, coming in through the picture of earnings coming up this week. As a matter of fact, if we take a look at this week's earnings calendar, and I just go to NASDAQ.com, we can see that Facebook has earnings coming out today. Tuesday is Microsoft, Google, and Visa. Wednesday is Thermo Fisher Scientific, Coca-Cola, McDonald's. Thursday we have Apple and Amazon and MasterCard. And so when we have weeks like this, understand that having weeks like this can cause some sideways market activity until we get some sort of an announcement coming out. So just be aware of that. And don't go out and force trades just because you feel like you have to trade today. It's not a bad week to take the week off, if that being the case. Taking a look at some of our energy futures, starting at crude oil. Now, last night we had looked at a crude oil breakout trade. So the breakout trade for crude oil, we did get a nice little move out of this level and got a little run away from that zone. Now, if you took that, you got a decent little 2-to-1 move fairly quickly, as your stop in that case was below this little 15-minute pivot, right? Our stop was below this little 15-minute pivot, so you got greater than a 2-to-1. So hopefully those of you guys, after we ended the live trade room who were in the class, you were able to catch that, make a little bit of cheddar. And then if you missed it in the overnight, it actually came back and gave us a retest of that level. So now since that level's been used and hit and retested, I'm going to remove it. And I'm going to put this right here, which was just formed in as a potential demand trade on a retest. But when you've got strong moves higher, sometimes you're going to need to get in utilizing breakouts as a way to re-engage some of these bigger picture trends. Another thing from last night, and I don't normally show Nat Gas, but we talked last night about our gap and go trade in Nat Gas, and Nat Gas has moved um, about a 1-to-1 reward to risk away from our entry point. You're just about to the 2-to-1 reward to risk target if you took the Nat Gas trade. So this was a gap and go position, that gap and go trade. Sometimes they take a little bit longer to make the entry, but it did come back, giving you an entry in the gap and go, and it's continuing its run. So look for 5.7 as your target in that gap and go situation. And then last was gold. We looked at gold last night. We talked about the fact that you could get a breakout above this 1800 line in gold. I thought about utilizing this breakout above this little 15-minute area. But the downside of this 15-minute area is sometimes you would get a breakout straight up and then it would come right back down and stop you out. And that's kind of exactly what it did. So we were looking at this area up here. We got some basing, but not a lot of great movement really out of the level. And it's just, once again, like a lot of things, kind of chopping a bit sideways. So there's a fair amount of sideways price action on that much smaller time frame. It is still riding higher, and if you're long, I wouldn't get out of a long position. Now, I do anticipate eventually we're going to trade all the way back up to at least 1810 as these speed candles tend to get retraced, and that I think is the direction that the market is heading overall. All right, let's take a look real quick at a stock having earnings today, and I want to talk about Facebook a little bit. Now, Facebook, we had looked at this level last week where we had this strong move away, which included a gap, and the market rallied back into that level. So leave me a comment down below if you're able to catch this position. And I didn't anticipate it moving down quite this violently before earnings, but this was really a reaction to the revenue miss by Snapchat based upon Apple's privacy laws. And I think it's the expectation that Facebook is also going to have some of those similar issues when their earnings come out today. And so we gapped out of this 340 area and dropped down pretty hard inside of Facebook. Let's see what happens on earnings today, but I think there's a good chance that we continue to head down on Facebook earnings if their revenue misses target, just like Snapchat did. Snapchat, for those of you that missed it, had a really, really bad day, gapping down from 75 all the way down to 55, and then kind of hovering in that region. So Snapchat would be one of them that took it on the proverbial chin with the new privacy statements or new privacy procedures that Apple has in place, and so that carried over to Facebook. So kind of keep that in mind as you're looking at the earnings on this one. We could continue to fall in Facebook. By the way, it wouldn't be a surprise because we're in a bigger picture downward trend. Facebook's a really strong drag right now on the NASDAQ in general, whereas Apple, which, looking at our FANG stocks, Apple is high basing right now at a resistance point, could set up for a potential breakout above this high, and then can run higher from here. But that's all I have for today, everybody. Hope you guys had a phenomenal weekend. If you need anything, let me know. Support@tradersarmy.com. Until tomorrow, I'll talk to you soon. See ya. Hey, thanks for joining us. If you like what we do, please make sure you hit that subscribe button. It's the only way the computers know that you're actually alive and really care. And go to tradersarmy.com today to learn a bit more. And if you want to see some of our other videos, click here in the box.